Hi guys, Chris Janzon here from Team Matt Sargent and Chris Janzon of Brock Harcourts Salisbury. Welcome to your first market update for 2012. Obviously the real estate market is in full swing after the festive and New Year period, and really looking forward to this year. Obviously the question on everyone's tongue at the moment is, how is the property market going to fare in 2012 compared to 2011? There's varying predictions and forecasts out there, but just wanted to share with you guys some information that we have readily available. Personally, I'm excited for 2012. I don't think we're going to see too much difference in comparison to 2011. I think we may see medium sale prices stay where they are, but I think we're going to see a bit more activity out there as we did see towards the end of last year, and I'll talk a bit more about that in a moment. But in reviewing the numbers, what we found last year in 2011, the average sale price for South Australia dropped by 5.5%, which in comparison to the other major states, the average was 4.7%. So prices did obviously peg back a little bit. Is that a positive? Is that a negative? Well, if we review it against the world economy and places such as Spain, Greece and the US, where some property markets fell from anywhere up to 70%, probably supports 5.5% reduction in SA is a good result, and that the market is very buoyant and if anything, slightly protected here. Other brilliant news for South Australia: housing affordability increased by 4.5%. Again, supports South Australia, not only a great state to live, great place to invest from that affordability aspect. So that's really good news. Information just released this week in terms of loan approvals. We've seen loan approvals from late last year increase by 1.4%. So really good news from a financial aspect, and it really supports that, whilst there's some turbulent and shaky times happening in the world economy, more particularly Europe, that's really confident news that more home loans here in Australia are being improved, and it really supports that our finance sector is diligent and still going really strong. So guys, I think at the end of the day, 2012, it's going to come down to supply and demand. I think what you're going to find is nearing the end of January, leading into February, an abundance of stock come to the marketplace. Traditionally and seasonally, a lot of people hold off, obviously, for the Christmas and New Year period. So I think you'll see a lot of new properties hit the marketplace over the coming weeks. And I think you're going to see more demand as well, as we did on the tail end of last year. With those rate reductions, we saw increased amount of inquiries, private viewings, and obviously groups through open homes on the weekend. So there's predictions of further rate reductions leading into next month when the RBA meet again. And I think if there's further reductions, we're going to see increased activity and consumer confidence for that reason. So all the best for 2012, guys. Obviously, for all things property, feel free to drop us a line anytime on 0423 283 265. Until next time, guys, we'll chat soon, and take care and happy searching.